Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Cybersecurity Awareness Month, which takes place every October now in its 19th year, is a collaboration between government and private industry to raise awareness about digital security and empower everyone to protect their personal data from digital forms of crime. So how should people think about crypto security? Joining me to discuss is Steven Ehrlich, Director of Research of Digital Assets at Forbes Crypto. Steven, it's great to see you as always. Welcome back to Trade Talks. And I think it's so key that we think about crypto in the context of how we should be thinking about it as it relates to cybersecurity.
Yeah, thanks, Jill, for having me. And this is a very important topic, and I'm glad I have the chance to talk about it because crypto, when it comes to security, is very important. If people know anything about Bitcoin and other digital assets, they typically know that it's a bearer asset, and possession is usually 10/10 of the law. But there's still a lot of misconceptions out there about security, so it's great to have the chance to kind of talk about those a little bit.
So why has this year been the worst on record for crypto security?
Right. So there's a few reasons why. I mean, for one, we've really seen that we've seen a big surge in hacks, especially on kind of a software tool known as a bridge. There's lots of different crypto blockchains out there, and as they've grown and sort of diversified a little bit, there have been efforts to try to make it easier to move assets from one blockchain to another, perhaps like put Bitcoin onto Ethereum or different types of stable coins like Tether or Circle. They really, they're available, most people don't realize, on sometimes 8 to 10 to 12 different blockchains. And you want to be able to move those tokens. An easy way to do that is called a bridge, where essentially you will sort of encumber a token into almost like put them into a digital vault on a blockchain and then get issued a new type of token that will run on a different blockchain. Those, however, can become honeypots to the tune of 9-figure sums. And while exchanges like Coinbase and Kraken and FTX and Binance and the like, because they've been in existence for so long, they've really built up big and robust forms of cybersecurity. These bridges are still relatively immature. And they've become very juicy targets for groups like the Lazarus Group out of North Korea to target, and if they're able to compromise perhaps a certain subset of the signers to have the ability to move funds on a particular bridge, they can siphon off very, very large sums of money. So far, there's been about $3 billion stolen this year in crypto hacks. That's the largest on record. The last record in 2021 of $2.1 billion, according to Chainalysis, a crypto forensics firm. And this month, October, is actually the worst month of the year so far. So, and a lot of these hacks have to do with bridges. So that's the number one reason why. These hackers, they get very sophisticated. They know that once they get the funds, it's difficult to recover them. And while certain targets like exchanges have gotten hardened, they look now for the softer, juicier ones that provide that really great payoff.
Yeah, and we're hearing that across the board too, not even just larger corporations, but small, medium-sized businesses that have to do these payoffs in order to survive. It's interesting how crypto hackers are moving down the chain as well. So, Steven, I guess the obvious question is, if everything within the crypto sphere is decentralized, how can these hacks be investigated?
Right. So it's kind of interesting because everything in crypto is decentralized, as you said, as far as blockchains go, and transparent to the sense that it's kind of human readable, even if it doesn't always make sense. Firms like Chainalysis or CipherTrace or Elliptic and or TRM or plenty of others have these great tools, and they can work jointly with law enforcement to try to track the funds and figure out who actually perpetrated an attack by sort of tying those keys or those wallets to individuals or groups. But that said, that just because you identify those groups, then the trick is, how do you get that money back? There are a few different ways. I mean, for one, like any type of money laundering or trying to cash out, these groups eventually are going to want to try to move the money and find a way to clean it so they can break the trail. And when that money gets moved, sometimes it will go to a centralized exchange who is on alert to look out for certain wallets tied to an attack, and they can try to freeze them. Also, sometimes these groups will use something known as a mixer, which is kind of a cryptographic tool to break the linkage between a sender and receiver to make it harder for these firms to track. One of the most prominent is Tornado Cash, which was actually just sanctioned by OFAC, the Treasury's Office of Foreign Asset Control, because of its alleged use in by illicit actors and money launderers and so on and so forth. But so it becomes a real big cat and mouse game. And to be honest, sometimes it just comes down to pleading with the attacker to return the money, saying that most of the money that they've stolen belong to individual investors. And sometimes these groups will even sort of offer a prize where they'll say, if you give us back 95% of the funds, you can keep the rest as a reward for finding a vulnerability, kind of a bug banning program out in the Wild West. So so there's a few different ways to try to get money back when there is a big hack. But to be honest, many times money doesn't necessarily get returned.
I mean, it's interesting. It's like the hackers are almost hacking the hackers. It's really interesting.
Yeah.
So Stephen, what's the best ways for people to protect themselves on a personal level? I don't have the technical expertise or even really what to do unless I relied on an expert such as yourself or another third-party platform to help me get through this. So on a very basic level, what can we do to protect ourselves to try and mitigate this as much as possible?
Right. So this is an important question, and I'm glad you asked it, because there's a lot of misconceptions again out there. When people say crypto gets hacked, most of the time it deals with the centralized entities like exchanges or applications like bridges or DeFi protocols or so on and so forth that are built on top of blockchains. Most networks themselves, especially the big ones like the Bitcoin, Ethereum, the large DeFi protocols, major Ethereum competitors, are pretty secure at a protocol level, which means that the protocols process transactions and add them to the network like they're supposed to. Many hacks that will impact individual retail investors that aren't engaging in DeFi on their own and managing their own wallets are the same type of hacks that people fall victim to all the time in traditional finance or just anywhere on the internet. Phishing attacks where you click on a suspicious link. People like to reuse passwords all the time, and if one password gets hacked and it's tied to your email address, all of a sudden all of your accounts that use that password get hacked. So make sure if you're using an account, select a hard to guess unique password. Two-factor authentication is very important as well. 2FA basically means like once you log in, then you get a text message or you're asked to enter a code from an application like Google Authenticator to verify yourself as an additional layer of security. Always enable that. And to be honest, Google Authenticator and like Okta and those types of apps are better than relying on a text message. Also, especially when it comes to crypto, this isn't necessarily a hack, but if someone is promising you returns that are too good to be true, they probably are. And don't trust your money to people that you don't know. Most likely, they're at the very least, they're not looking out for your best interest, and it opens you up to a lot of vulnerability. And just one last thing that I would definitely recommend people do is not to brag about owning crypto online at parties publicly, because why make it easier for a hacker to try to target you?
Yeah, it's almost like when you brag about your wealth on traditional social media, right? Or if you're on vacation, well, people know that your house is empty, or they know where you are and kind of some of the stuff that you're flaunting. So it makes perfect sense when you think about it in the digital world as well, just to be smart and use common sense, right, Stephen? Appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.